Hi traders, you're welcome back to the Forex Geek channel. In this video, we're going to be diving deep into one of the simplest yet most powerful trading strategies, and that is the Heikin Ashi Trading Strategy. Okay, whether you are a beginner or an experienced trader, this strategy will help you spot trends clearly, reduce market noise, and improve your trade entries. So if you are ready to learn how to trade with more confidence, hit that like button, subscribe to the channel, and let us get into it. So now, first things first, let us break down what Heikin Ashi actually is. All right, let me add the Heikin Ashi indicator to the charts. Okay. All right. Okay. So now, unlike traditional candlesticks, the Heikin Ashi candles are a modified version of regular candles. They are designed to smooth out priced action and filter out market noise, making it easier to spot trends. So here's where Heikin Ashi works, or rather, here's how it works. Regular candlesticks, right? Each candle represents a single period, right? That is for the regular candlesticks, right? Right? For the regular candlesticks, each candle represents a single period. For example, on the 1 hour chart, each candle represents 1 hour. On the 15-minute chart, each candle represents 15 minutes. Okay, and each candle shows your open, high, low, and close price. Right? For the Heikin Ashi candles, these candles are calculated differently. Okay, instead of just showing the open, high, low, and close, Heikin Ashi uses average price data, creating a smoother and more consistent chart. So this smoothness helps you to see the bigger picture of the market and avoid reacting to every little price fluctuation, which is crucial for making more accurate trading decisions. Now, let us talk about how to read Heikin Ashi candles. For bullish candles, they are typically filled candles with no or very small lower wicks. They represent strong upward momentum, right? Then for bearish candles, these are hollow or empty candles with no or very small upper wicks. They represent strong downward momentum. Then we have the doji candles, right? You can see an example, right? We have the doji candles, when the candle has a very small body with wicks on both sides, it signals indecision or potential reversal in price. Now, the key here is to look for consecutive bullish candles or bearish candles. When these appear, you are likely in a strong trend. So the longer the body of the candle and the shorter the wicks, the more powerful the trend. All right, now let's talk about the strategy you can use to trade with the Heikin Ashi. The goal is to spot trends early and ride them as long as possible while avoiding false signals. So here's how you can do it. The first step is to identify the trend. All right, the first thing you want to do is identify the trend. This is where Heikin Ashi really shines. It helps smooth out the price action so you can see the overall direction clearly. In an uptrend, you will see consecutive bullish Heikin Ashi candles. If these candles are long with little or no wicks, then the trend is strong. In a downtrend, you're going to see consecutive bearish candles, again with little or no wicks. Okay, so you can also add your moving average to the chart. All right. So I recommend using the 200 EMA and the 50 EMA. All right. These two moving averages help show the overall market direction. When the price is above the 50 EMA and the 200 EMA, it indicates an uptrend. And when the price is below the 50 EMA and the 200 EMA, it indicates a downtrend. So when you have the Heikin Ashi candles aligned with the trend and price is above or below the moving averages, you are more likely to be in a strong trend. For example, you have a series of bearish Heikin Ashi candles, and you have the price below the moving averages, with the death cross occurring, then you're likely in a good sell trend. So once you've identified the trend and confirmed it with the moving averages, you can enter the trade. Okay, if it's an uptrend, you can enter when you see a bullish Heikin Ashi candle, especially if it's a strong candle with little or no wicks. Okay, then if it's in a downtrend, you can enter when you see bearish Heikin Ashi candle, preferably with a long body and short wicks. Okay, so if the trend is strong and your entry signal aligns with the trend, then you have a high probability trade. All right, you can then for your exit, as with any strategy, you want to have an exit plan. Okay, a great way to exit is by using price action to spot potential reversals. For example, if you see a doji candle after a strong bullish trend, all right, it's just an example, right? For example, you can see this doji here after this strong bullish move. Then you notice a doji, for example, it can signal that the trend could be reversing and it might be time to exit. So at that time, you can just consider exiting your buy trade. Alternatively, you can also use trailing stops to lock in profits as the trend continues in your favor. Now, one of the major benefits of the Heikin Ashi trading strategy is that it helps you stay on the right side of the market. Now, unlike the regular candlestick charts, which can be noisy and make you react to every little movement, Heikin Ashi gives you a clearer picture of the overall trend. So here are some advantages, right? Some additional advantages. It helps with clear trend identification. It is much easier to see whether the market is trending up, down, or sideways. All right. Remember, because in a strongly bullish trend, you're going to notice consecutive white candles. In a strongly bearish trend, you're going to notice consecutive red candles. Okay. Then it also helps with reduced market noise. Heikin Ashi smooths out price fluctuations, helping you focus on the big picture. And it helps you with improved trade timing. So by using Heikin Ashi with moving averages, you can find better entry points and spot trend reversals before they happen. So that is a wrap for the Heikin Ashi trading strategy. Now, make sure that you always pay attention to risk management. Okay, do not trade with an amount that you cannot afford to lose, and do not risk more than 1 to 2% of your trading account in a single trade of your account balance. Okay, on a single trade, and ensure you always use good risk to reward ratios. All right. So now you have a simple and effective way to identify trends and trade with more confidence. If you found this video helpful, make sure to hit that like button and subscribe to stay updated with more trading tips and strategies. Comment below, have you ever used Heikin Ashi in your trading? What is your favorite trading strategy? Let us talk about it. Thank you for watching, and I'll see you in the next video. Happy trading.